And Ben, and this is going to be a great interview. My trading warrior brother Ben Maldonado is here. And Ben, welcome back to Face. Looking forward to catching up with you, every 3, 4 months. And so much has happened since our last conversation. So how goes things for you, buddy?
Oh, it's great. We've had a very good year, as you know. We've been positioned
Bitcoin
properly.
bulls.
Yeah,
Yeah.
Bitcoin, gold, silver have really helped the year. So I haven't participated much in the equity side, but it's okay. Big things are coming, big changes are coming. So I'm excited to share the latest with you and the Face community because I think it all boils down to, forewarned is forearmed. So
Okay. So
let's go.
let's like Dak before his injury in his cadence, he'd start off with "Let's go."
Yeah.
I like that. So let's go, bro.
Let's go. So today we're gonna do a quick trip around the world of cycles and geometry and some technical analysis. The first thing, the people have spoken, the election's over. Now what? I've heard people comparing this to sort of Reagan's election, like when Reagan
Yeah,
won.
yeah.
So,
There was like this market analog where you had to blow off what for a week or so after the landslide, and then that
yep,
was it.
yep. And
You
so
see a
what
parallel there?
and I did some checking in my cycle work. There are some parallels with 1980. I think the better comparison is 68. So we're going to look at that 68 or 80. Where are we? And what's the better fit? So we're going to cover that. We're going to talk about cycles. We always talk about the epic cycle because that's the big, huge cycle that we are going through the end of one and into the new. I'm going to introduce the Rebel Yell cycle. The reason being it's a swing trading one. So everyone always says, well, how do you trade a 400-year cycle? We talked about how to do that, but Rebel Yell it's a swing trading cycle. We just recently had a signal, so I want to highlight that. And then there's the real estate cycle. I know you had a woman on who was very good in talking about real estate. I want to bring in
Melody. Yeah.
Melody, yeah. I want to bring in the real estate cycle and talk about that. The reason is because we're getting this confluence of different major cycles all sort of getting in phase, which means it's going to be a whopper of a cycle. Big crisis equals big changes. Politicians always use crises to make changes. I think that's something we should expect, and then we'll go over some highlighted markets to that you can position yourself in potentially to take
You know
advantage
that
of these
that
trends.
word that word infamy resonated with me because I talked to an astro trader,
Hmm.
and she has a cluster on December 7th uh, uh, that matches up to the cluster we had on December 7th in 1941 on Pearl Harbor,
Wow.
with more intense clusters than we had back then.
Yeah,
So I don't
December looks
know.
rough. It looks
Yeah.
rough. I don't know what, I don't know how, I don't know why, but it looks rough.
Okay.
It
All
looks
right.
rough.
All
So
right.
let's
So carry
let
on.
let's go.
All right.
Let's talk about 1968. We covered this on the last show I had with you, so let's quickly just go over some highlights. The yellow is obviously we added in the recent results. Uh, the main thing is look at all these different aspects of things that were happening in 68 that are sort of, coalescing with the same thing that's happening here. Some of the crazier ones that I thought was wild was that the Democratic convention was in the same city. The election day
Yeah.
was the same day. There was unpopular war, social unrest. Nixon had lost his previous national election. So did Trump. Bottom line, Nixon won, Trump won, and you and I have been talking about this sort of connection with the 70s for years on your show, Dale,
Yes.
and and
We have.
and we made the connection that Nixon was very much like Trump. They were, if you just go back and study history and what people were saying about Nixon and what they thought of him, and the same sort of themes are coming up with Trump. So I'm really And now that we have this result where they both have come back, which is really hard to do after losing a national election to come back and win it. I think only a handful of people have ever done it. So there is this strong connection between Nixon and Trump. And the thing that I didn't realize as a kid, I was just a kid when Nixon was the
Yeah,
whole Watergate thing went on, but the he was vilified, but he really went against the system and sort of the same theme that Trump has, which is the system is not working, the system is not serving the people. Nixon was kind of the same thing, and he was never portrayed that way in history. But when you go back and look at the stuff he was trying to do,
he was a maverick, huh?
that's right. And it's ultimately a lot of people believe it led to what his problems, and why they got him out.
Well,
Because
you either loved him or hated him. It was very similar in that
yeah,
respect.
yep,
Because I could remember my mother wasn't crazy about him
yeah,
because, yeah, because she, loved Kennedy and then, didn't like Johnson, and then Nixon was like salt on the wound for her.
right,
So,
right. A
okay,
lot of similarities there. A lot of
yeah,
similarities. Now
yeah.
let's look at 1980. Let's compare the 1980 to present day. So we did have an unpopular incumbent, Carter. Same thing. We had an unpopular incumbent, Biden. Russia was at war in Afghanistan, which we opposed. They're now at war in Ukraine, which we opposed. Again, another interesting connection. We had a hostage crisis in Iran. Right now, there's a Middle East war going on with Iranian proxies. So Iran is involved. Inflation and the economy were very important issues then. If you look at the exit polls, they were, top of the list in terms of importance for voters present day. This one was kind of interesting, is that immigration, there was the Mariel boat lift was then,
I
where
remember it. Yeah,
remember where Castro was emptying his prisons and sending them
yeah,
to the US.
yeah,
It's the same thing that's happening now. There's, this immigration where, there's charges that, the Venezuelan government is emptying their prisons and
yeah.
sending those people here. So it's wild. And here's another crazy one. Pierre Trudeau was the prime minister in Canada. His son is the prime minister in Canada today.
Yep.
And that's wild, right? It's just that connection there. Of course, Reagan won and Trump won. So there are connections, not as many or not as numerous as with 68. But here's the next slide. We'll go into looking at some of these analogs and what happened.
I was just thinking though, Ben, at first we were very concentrated in the 70s.
Hmm.
And then as time moved on, especially with this election, you could even go into the 60s. And then
Hmm.
you could also go into the 80s all the way.
Hmm.
So I'm thinking that what used to take 2 decades or more, that time is more compressed and we have decades worth of action that normally would have been 1 decade, a few decades of history compressed in a shorter amount of time.
I think that's an astute observation. I really do. Because time is just moving so quickly. And, with the interconnectedness, things just seem to happen so much faster.
Yeah.
So I don't think that's a bad theory at all, at all.
Okay.
Look here,
Future shock.
yeah. So look here. Here's the election day in 1980. We had that big huge bounce. If this is the proper analog, you are here. We're kind of rolling over, and you have this slide, and it makes sense, right? Because what did Reagan have to do? And Volcker, they jacked rates because they had to kill inflation. It
Yeah.
caused the economy to slow down. And if you look at what incumbents do this when they get in there, not incumbents, I should say, presidents do this in the first 2 years. They try and throw everything out, right? Create the worst possible results in the first 2 years, and then have the economy turn around. Take the pain early, have the economy turn around when they're coming up for reelection.
So
And
at that bottom on that chart was August 1982,
that's correct.
and it was also a three drive.
Yep. Three
So
drives.
anyway, you guys, even before I knew there was such a thing,
Yeah.
because in 1980, well, I should have known by then.
Yeah. So
Anyway, I was too busy having fun.
there you
Um,
go.
Okay.
So
So
that's the
that's a
first
nice analog.
analog. Here's the second. Here's 68. Same type of thing. We had election, the election, you had this
Yeah.
rally, and then you
Yeah.
rolled over.
Yeah.
And in thinking about Trump, the things that they're going to do, if they lay off millions of people who are in the government, it's going to cause, economic slowdown. It's going to cause um, potentially a recession. But if they take the recession early and can see the gains and have us coming out in a couple years when the congressional elections are up, well, and mainly in 4 years when the presidential election has again, they'll be in good shape. So if they're smart, they're gonna throw everything out, including the kitchen sink, right away, take the pain early, and that could result in us seeing a market come down as it starts discounting that, and then at some point in the near future, and again, I think you're right. Time has been compressed. Maybe it's not a 2 year bear market. Maybe it's 12 months. Maybe it's 9 months. Maybe it's 15 months. Then
Yeah.
the market will start discounting the benefits. And I think
Yeah.
Look to Argentina as an example,
Yeah.
where Milei went in, slashed and burned, with his chainsaw. The
Yeah.
economy went down, but the market started going up once inflation came down and once the tangible results started to be seen or anticipated. That's the kind of thing that I think we could be looking for. Now let's look at the two situations to see which is a better fit. So in 68, inflation was on the rise from a low level. Economic growth was slowing and a recession was, coming. Interest rates were low and heading higher. In 1980, we were in a much different place economically, right? Inflation was peaking. Now we did have economic growth slowing and a recession starting because of the things that were being done, jacking interest rates to
Yeah.
21% and all the things they had to do to kill inflation. And interest rates were sky high, but they were falling. So for that reason, I think 68 is a much better comparison than 80. Um, if you look at the economic situations these presidents had going into their term. Here's a good graphical example of the inflation. You can see in 1980 we were way up here and just ready to start rolling over. And
Right.
whereas in the 60s, in the late 60s, we were just starting this sort of three drive of inflation,
Yeah.
three drives.
Yeah. Three again.
Yep. And then let's look at the unemployment rate. So you can see we had low unemployment, just like we do today in the late 60s, early 70s. And then we had the recession, employment goes up, another
Yeah.
three drive, right, Dale?
It looks
Whereas in
like, yeah, I was going to say, it looks a lot like as inflation went higher, unemployment went higher
yeah,
because rates went higher and killed business, right?
that's it. That's it.
Okay.
So let's go to the
Nice
next
chart.
one. Here's interest rates.
Yeah.
In the early 60s, I mean the late 60s, we were coming off of a low base of interest rates and moving higher. Here we were
Yeah.
basically at the peak because if you remember, this is where the 40-year bull market in bonds started,
That's right.
right up in here.
Yeah.
So for those three reasons and others, I think 68 is the better comparison. So if you're looking at analogs, while there is some uh, cyclical connection to the 80s and to Reagan, the better connection is Nixon and 68, late 60s, early 70s. So
Okay.
that covers that. Let's talk about the epic cycle. I've talked about it many times on your show, but let me just quickly for people listening for the first time. It's a 400-year cycle that governs how we organize societies, like the way in which we operate as a collective and as a society. The current cycle is ending, and the current cycle has helped us build up these large, centralized, with power, concentrated institutions. And what we're seeing now and what we've seen over the last 3, 4 years is faith in these institutions has gone down dramatically as they begin to fail and they begin to not serve our needs. So what we're moving towards is a more segregated and localized and individualized society. We're not going to have these massive structures and massive organizations, governing things anymore because they're not just not working and they're not going to be supported by the background frequency. Recent developments, I think, are sort of corroborating and supporting this whole movement. Look at the election results. The the mandate given is that tear down these institutions, right? They're not working. They're not serving the people. They're not providing what the people want and what the people need. And so the power is moving from this more authoritarian, centralized focused to more individual, local, sort of smaller tribe type governing systems. And I think that's not only an American thing, it's happening all over the world. If you look at the cabinet appointees, it's funny. I heard a debate the other day where they were talking about, well, are these people qualified? They just don't fit the traditional bill. And that's exactly right. It's the wrong argument, but it's the exactly correct observation. These people are being put in place not to be business as usual or status quo. They're being put in place to tear down these institutions and create something new and different. Tariffs have been in the news a lot. I think you've correctly stated, Dale, that in the Great Depression, tariffs were a strong contributor to the economic malaise and some of the problems. Here, I think tariffs are congruent with the epic cycle in that it's emphasis on local, right? It's like forget about global, forget about the world. We want to protect our people. It becomes, this America first, or if you're looking at it globally, my country first, the rest of the world second. So it's more of global fragmentation as opposed to the globalism where, it's one big world and we're all working together. It's people acting in their self-interest for smaller groups, instead of blocks of nations or the world in whole, it's countries, it's local factories they want to keep open. So tariffs are, I
Yeah.
think, a topic that's come up, and it's a sort of a buzzword, but it is completely compatible with the epic cycle. And lastly, this movement of no more wars. Let's have peace. I think it's less about the moral issue of is war right or is war wrong or the suffering, which are all very
It
valid
costs
things.
too much money.
It costs too much money, and we need that money here. We need to spend it on our people. We need to spend it in our communities, not send it abroad somewhere else. And so that's
Okay.
that's why we're seeing it, it goes across the divide, right? It used to be, the Democrats would say that and the Republicans were the war hawks, and now it's kind of flipped. And more the moderates in the country are saying, hey, we don't need to be spending this much money. We got problems here we need to spend money on. So it's that sort of feeling and emotion that's coming uh, into the consciousness of people because of this epic cycle and the trend towards local as opposed to global.
Okay, so going back to like the Woodrow Wilson days, until he did commit to World War One, we were in that type of isolationist type of country. We didn't want to have anything to do with European wars. We
Right.
were
And now
we
and
were
now it's
dragged. Yeah,
yeah, it's gone full circle, right?
yeah, yeah.
And
Okay.
speaking of circles, let's talk about, so we mentioned the epic cycle, we talked about recent developments. Here's the three sort of assets that I said fit very well with this cycle. Here's gold. And gold, this is the monthly. I like to look at the monthlies on the show to give the big picture because we're talking about bigger picture cycles. So I think in gold, and I heard you say it about a different asset. I can't remember which one. I think we made a high, but I do not think it is the high.
Okay.
The
I don't either.
You're right. We made a nice run, and now it looks like, if you look at this circle, the circles are a nice way, adding geometry with the squares that we have on here because it can show you sort of how a price can get bounded by the circles. You see this
Yeah.
one circle going back to 2011, like we caught it on the way down and then rode it on the way up. And then we've got another circle that, you know, defined the lows coming in. And I think we're getting captured by this circle here on the highs. And, maybe we get 2, 3 months of this kind of price action. The key number here on a monthly basis is 2667. As long as we can stay above that, we're going to 3150, which would be the top of the
You
square.
mean we won't go to 3150 if we go to 2400?
No, we could. It's just it's more probable. All these squares do is they give you markers of price where probabilities flip. So like below
Yeah.
2667, it's more likely that we're going to stay stuck under. As long as we're stuck under that, it's more likely we're going to drift down towards the breakout. If we stay above this, 2667, it's more likely that we're going to 3150. And so probabilities flip
Yeah.
as
So
price gets over and above that sort of demarcation zone. The
got
other
it.
thing I wanted to show is gold has shown that in the past it's done 144 months from a low to an actual high. If we do the same in this, looking at the low we made in 2015, it projects the bull market high in gold like late 27, early 28, 2028. So
Yeah.
from a big picture
It's got
timing
a big
standpoint,
runway.
it's
Yeah.
got a big runway. So Dale, maybe we chop around between 24 and 28 for months and months and months, just like we frustrated everybody, when we were going
Yeah.
sideways here.
I'm
And
thinking by January we should cleanse out most of the bullishness. I think you're already starting to hear it, you know. When gold started coming off, people said, well, it's not about gold's done, it's about growth now.
Mhm.
Okay. And that was part of the, buy stock mentality. When they both go up and down together anyway.
Sure.
So I don't know why people think there's any differentiation between the
Yeah.
two.
And the 144 comes from, if you look in 99, we made a low, and then 144 months brought us to the high in 2011. So
Huh.
again, if we're saying if that repeats again, because these
Yeah.
markets like to have this, each one has a certain vibration and a rhythm, and so
Yeah.
we just use this as a potential marker, right? Where if we go off the low in 15, it
Right.
gets us into that late 27, early 2028.
Okay.
So there's still a run left in the bull market in gold,
Oh yeah.
and the epic
Yeah.
cycle supports that.
Well, you're basically right about the dollar, the way it came back from 100. And I was talking about it today. You think the dollar has, and that could be part of why the gold hasn't bottomed yet, because I don't think the dollar peaks until the end of the year.
Right?
And we could go 109, who knows, 110. But you used to talk about people in, sometimes I start to own things, and I've heard it from you. I heard it from you. One of your major reasons for being bullish a dollar was having an ocean between
Absolutely.
Russia and us and Europe and us.
Yeah,
And
absolutely.
and what do you think is going to happen there in the next 2 months before Trump is installed?
It looks like, and we'll get to that, but it looks like, from the crisis standpoint, I think this, and you probably agree with me, Dale, because you think this way too. The whole kumbaya and the quiet, sort of the eerily quiet and no response from the opposition here after the election really troubles me. There has been no pushback. There's been no, all they're talking about now is why they lost or why this happened or why that happened. Not about, oh, we're going to fight, we're going to do this, we're going to that. It's been way too quiet,
Yeah,
which makes me feel like something's coming. I have no idea what it is. I have no idea how or why, but some kind of major
event.
pushback or
Well,
operation or event
well,
is coming
well, why did you put infamy in December on
because
your
of that.
opening slide?
Because
Okay,
of
but
that.
you don't like to talk about it in public because people think you're a kook. Tell me the truth, right?
I mean, it's also because if you don't understand the cycle work, it seems crazy and it seems like, oh, it's just, you're just saying that to get attention,
You know
which is
when we're
not my thing.
self-actualized? When we don't care
Right. I don't,
what
I
other
honestly, I
people.
don't care if
All
people
right,
call
so
me a
tell me
kook.
what you really think is going to happen in
I think
December.
there's some kind of, they're going to create some sort of constitutional crisis. They're going to force him there through some kind of protest. They're going to try to force him to dictate martial law, which would then say, okay, see, he is a dictator. This is what we told you was going to happen. You know what I mean? Just
Yeah.
undermine him in all kinds of ways and undermine
Okay.
that administration. I mean, I even read something where they were talking about putting up a shadow government, like with a shadow Senate and a shadow uh, court system. And I'm like, that would be a constitutional crisis.
How about Putin? Because since we're talking about the escalation there, how about Putin? Is he going to set off a tactical nuke?
I think he's probably too smart to do that. Like he
Okay.
recognizes a trap.
All right.
But it's like how much can you punch a guy in the face before he punches you back? I mean,
Well, all he has to
that
do is sit. All he has to do is sit for a few months, and he'll get what he wants anyway,
probably.
right?
So
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 that's probably
we'll
yeah.
see. We'll see.
And the
Because it could
Middle East, Ben?
that's again, it's another powder keg. I mean, and it's the question is how can the people currently in power sort of pull the pin and hand Trump a grenade? That's what I feel like they're going to try to do. How they do it, I don't know. I don't, obviously I'm not privy to any kind of information that even says they're going to do that. But I think on the economy, I think in global affairs, I think in any way they can, they're going to pull a pin, hand him a grenade and say, good luck.
No. Okay, it wouldn't be unprecedented. How many times?
No.
Look, the financial crisis was handed off to Obama
Yep.
right when he got there.
Yeah. So
So maybe this, it's he's going to have a handoff of more complicated things. Yeah, I have a vibe about December too, and
yep.
well, the parallel a bit of December 7th, and I know people think I'm a kook, but it was about us getting attacked. It wasn't on the mainland, but it was an attack. Does it have to be a military attack? No, it could be um, a terrorist attack. We did let some people through the border. Anyway, I just wondered why you use that word infamy
Yeah, because
in
I don't
December.
think it's going to be looked back as a joyous time in
Yeah,
when we look
someone's going
back
to
in
try and
history.
ruin the holidays. Something's going to try and ruin the holidays this year, don't you think?
I think so. I do.
Okay. Well,
So
but it's not going to, we're not going to let it ruin ours, right? Everyone
no,
here, everyone
no,
here, because we're going to be on the right side of things.
that's right.
And
And
we
you'll be able to
know,
take care of your family.
yeah, there you go. So we're going to all be good, the best stewards we can be. Did I interrupt your presentation on this
No, no, I think
tirade?
it's a good thing to talk about.
All right. Okay,
So
so silver.
silver, the key thing with silver, it looks like it's going higher. You see the levels there on the chart. The other
Yeah.
thing that I'll point out, low to high here from 2003 to the highs in 2011, 90 months. If we project out 90 months off the low in 2020, again, it puts us into late 2027, early 2028. And
Wow.
again, those
I
see how these counts are pointing
yeah,
to the same area, Dale, even
yeah,
though they're totally different markets and totally different counts. And
yeah.
that's the thing that I look for in my analysis is, am I getting
Confluence.
similar sort of
Yeah.
targets and windows based on different markets and different approaches? And there you go.
Okay.
Let's look at the star of the show recently is Bitcoin. I do think Bitcoin again has made a high in this area, but not the high. And here's
Okay.
why. But here's
Yes,
where I
sir.
also know where I'm wrong. If we get a monthly close over this 93,000 level, we're
Yeah.
going to 111.
Well, the formation, if you just take the flag, call it a bull flag,
Hmm.
is 126 from the lows that you have,
Yeah,
and then the
yeah,
flag.
yep.
Yeah.
I can see that.
Yeah.
So, I
Okay.
mean, I'm still bullish on it because it's the technicals are very bullish. I just think we could see a little pause in here, again, just look at the levels. If we close over 93 on a monthly basis, and we stay above that, we're going to 111, 112 is the
Yeah,
next
well,
stop.
we're in five, right?
Yep, it looks like it, right?
Elliott wave terms. So,
Yeah,
yeah.
one, two, there's three, there was a four, and this is your
Right.
five.
Yeah.
So let's
Okay.
see. Let's see how it goes.
All
All right,
right.
let's talk about this Rebel Yell cycle. I posted this on to my followers on X, and it gives us swing trading signals. It identifies potential turning points in the market. It's proprietary patterns based on price and time action. And the latest signal was November 12th.
Okay.
So why do I want to talk about that? Because it was right here.
Yeah.
Now, Stelio said correctly, technically, there is nothing bearish about the chart, right? Nothing bearish about the way the S&P, or in this case, the futures look. But look at what we got with the past two Rebel Yell cycle hits when they came in. This was a really nice move in July. This was October. It found support. I mean, you can't just trade these things just on their own. You got to have technicals involved. And when the market, shows the technicals don't support it, you turn. But look so far. If we get a lower high on this bounce up here and roll over,
Yeah.
then the technicals will kick in. So here if you're looking at the daily, 57.48 is the key. If we get stuck below 57.48, that means all this up here was a false break in distribution with this
Yeah.
high.
Okay.
So you got to watch that. All right, let's go to the real estate cycle. The real estate cycle, because real estate is such a highly levered asset. People use debt to buy real estate. It's essentially, I like to look at it as like a long-term credit cycle.
Okay.
This cycle tops in Q. My work in on this says it tops in Q1 2025, which is just a couple months away. Um, and it's in phase with other longer term cycles like the epic cycle, like other things you could look at, like a 50-year cycle, a 100-year cycle. All these things are phasing right in this time frame. So what it tells me is the reaction should be fairly large and fairly big. uh, this
Are you out of? I know you used to dabble beside your own home.
mhm.
You flat real estate besides your
Yes,
house.
yes, yep.
Okay. Do
and
you
and
have?
looking and looking
Go
I
ahead.
my neighbor is a realtor, and I keep telling her, I said, yeah, I'm interested, but you got to. I told her this in June of 2022. I posted this potential top in real estate as Q1 2025, and
I remember.
I've been telling her for the last 2-3 years, yeah, I'm looking, yes, I'm looking, but not yet, not yet. And I just saw her the other day. I said, we're going to start looking early next year, and she said, okay.
Well, Melody says inventories are rising like crazy, even here in California.
Yeah, I mean, I believe it because
Uh,
it's the cycle's
and
coming.
and the best short, in my view, is Airbnb,
That's probably a
because
great short. I haven't looked at that.
people bought a bunch of them, and then if we have a recession, people can't go. It hasn't made a new high since the end of 21.
Right.
Okay, so anyway, and
That's a
the
problem.
and the home builders are candidates too.
I found this
Uh,
chart on the net, and it kind of captures it pretty well. I mean, I think his dates are a little different than mine, but you could see the
yeah,
sort of the cycle. He's saying
yeah,
25, 26. I think it's like first quarter 25 we peak and then start heading down. So
okay,
that's
yeah.
that's the that's the real estate cycle.
And Melody said about 5 years to shake out once it starts.
I think, yeah, 3 to 5 is probably the right number. Big changes are coming. And to get big changes, generally you need big crises. So I think
Yeah,
expecting crisis is the proper thing to do because you'll be prepared. You and I already talked about this, but it's been a little too calm post-election, uh, especially given the rhetoric that was used during the election season. Um, Everybody wants changes. The big battle is over the direction and the type of changes that are going to take place. I think separation is inevitable. I've heard California is floating about seceding, so that would not be surprising. If that sort
My
of
hairline is receding. Oh, seceding. Oh, all right. Anyway, don't want to lose my silver crown.
right.
Anyway, okay. Yeah, so not so peaceful December. Is there any
Yeah.
way that martial law could be declared and prevent Trump from being installed
I don't know. I
if we
think
were in a
it's
war,
possible. It's possible, right?
state of emergency,
Yeah. What
false flag, turn the lights out in the country, something like
yeah.
that?
What one of the things that is really interesting is that you said that person you had on to December 7th, and the first week of December, I have a cluster of these cycles, which is why I think this whole thing starts there.
Okay, I thought it might be a low going into it, but it could.
Yeah,
It
who
could.
knows? Who knows?
Yeah.
This was my summary of the election. That was my prediction for the election. I think it's the results are the same.
Yeah.
Let's talk about the opportunities really quickly. And then real quick, I wanted to share some analysis on NVIDIA because their earnings are coming up, and that's a big thing. I think you could sell risk here. Here's an example on a weekly basis. Um, we're 240 up in price, 240 degrees up in price by 240 weeks in time from the COVID low. And
Nice.
that's what Gann would call a price and time squaring.
Nice.
Now, does that mean we automatically get a high? No. What it means is
Nothing's automatic.
be alert, be alert for change. Because we could blow right through it and keep going, and the
Yeah.
melt up could continue. But we know that you could see the level there, right? 60,
I know
32.
someone looking for 7,500, and he's
Right.
been pretty right.
Yeah. So 60,
Right.
32. We close above 60, 32 on a weekly basis and we clear this square, we're going higher. If we
Ben, I brought it up. Everyone, the whole world was looking for
6,100.
6,100.
Yeah, I've heard
Oh,
you
so
say
you were
that.
probably here. And so you're right. I mean, we're either going to break hard from here. 6,100 won't work
Right.
if they give people the chance to sell it there. We'll be
No, if we,
62, 63
yes.
before you know it. So,
Yep.
okay,
So
go
60,
ahead.
32 is the key number weekly
Yeah.
basis. If we close
What a
above
great
it,
interview.
going
Keep going.
higher. All right.
I'm going to shut up now.
Here's
All
the
right, go ahead.
NQs.
Yeah.
The interesting thing here to me is we are in danger of creating a false break with the July highs, right? Because I kept saying to my partner, my friend and partner, that my trading partner, that if ES made a new high, Dow
Yeah.
made a new
Months
high,
ago, months
everything made a
before.
new high, and the thing that led us up couldn't make a new high.
Yeah.
That's not
Great point.
good.
Yeah.
And we finally pushed up, made the new high, and now we reversed lower. Here we need a weekly close over 21,000.
Yeah.
If we get stuck under this 21,000, it means that the this up here was a false break, and they were just getting people wrong sided. So you got to watch that on NQs.
Okay.
Let's talk about some of the ags. You love the ags, so do I.
Yeah.
I think it's time to accumulate. It's they're down near the lows. Look at this. Look at this area where we went sideways for 5, 6 years, Dale.
Yeah.
All we got to do is if we get above 462.75, we're above this accumulation, and then I think we fly on corn.
Okay. Yeah.
Again with corn in '05 to 2012, low to high, we did 90 months. If we take 90 months from the 2020 lows, it puts us into early 2028. Again,
Big
those
runway.
numbers are coming up, right? Gold,
Yeah.
silver, same numbers. Corn, same number. All right, let's check beans.
They're trying.
Very similar pattern. We're holding if we get stuck below this 983 level, be careful. It's going much lower. But if we can turn and get above 1274, this thing's going to scream to new highs. Low to high, '05 to 12, 90 months, just like corn, takes us again. And if we take the low here in 19, takes us into 2027. Potential bull
Okay.
market high in beans.
Yeah.
All right,
$30 probably.
yeah, let's go to coffee. Coffee's kicked up.
Yeah. Yeah.
The key price on coffee monthly basis 283. We close above this, it's going to finally get over these highs, and then we're going. 350, 400 coffee will be on deck. So if you drink coffee, you better save your money.
Okay.
Here, low to high was 30 months. If we take 30 months from the low, puts us into middle of next year. This market's ahead of the others.
Okay.
Let's go to the next one.
As was
Sugar.
cocoa. Yeah.
Yeah, as was cocoa, right? Cocoa was the first that roofed.
Yeah.
Sugar, key price here, monthly basis is 22.40. We get above that, then we're going to challenge the highs from last year, around 26, 27 area. Low to high cycle in 07 to the highs in 2011 was 45 months. If we go 45 months off the recent low, because you can see this was the second peak, right? We did one, and then we went to the major peak, right? Your three drives, 1, 2, 3.
Yeah.
So far, we've got one. So if we go 45 off of there, it puts us into 2028. Again, that cluster.
Yeah,
All
we're
right,
going
let's
to have some tremendous bull markets. I was going to hold you negligent if you didn't bring this up.
the
Go ahead.
the
Fantastic.
Widowmaker.
I've been pounding the table on this
I
one.
know, and I love it, like because you have the eye, right? Look at this triangle.
Gaps. Yeah, look at that.
This
Yeah,
thing's been forming a triangle for 2 years now. This is a
yeah,
monthly chart. This isn't 30 minutes.
right.
And we're just poking out of it, trying to get out of this. The key thing here, look at the low to high, right? 90 months low to high. If we take 90 off that low, again, we had the first drive. Here's the
Yeah,
first drive, right? Then we got the
yeah,
up drive to the top. 90 months takes us into late 2027.
yeah. Okay. Is that it?
488 key number there. Get above that, then we're going. Then we're
Yeah,
going.
yeah. It looks good.
Yep.
That's a nice base. Yeah.
Nice base. Here's the dollar. You wanted to see the dollar. I'm still
Okay.
bullish the dollar.
Okay. Where are we going?
Key number here is 107.46, Dale. We got to get above that. You can see it's a full square, and it's been holding price for highs for the last 2.5 years.
Okay. So then that would take out, if we do that,
We
you're
go to
looking for
116 and a
120,
half, then to 125. It's
120.
sort of stair steps, right? First price target would be 116.50, and then we go to 122.55.
Okay.
Let's look at low to high, right? 95 to the peak in 2001 was 75 months. You can't see it on the chart, but back here where we had the peak back in the 80s, it was 76 months to this peak here. So I
Yeah.
said, what if we just do 75 months off of this low? 2027 gets us into
Okay.
2027.
Okay.
That's the dollar. Bonds.
Good
I think
trade.
bonds are going lower, which would support a higher dollar. And
Yeah.
the main reason is I'm not a big Elliotician, but I just look at waves. There's 1, 2, 3, and this whole mess has been 4.
Yeah.
And I think we're rolling over in a 5. I think par is in the cards,
Okay.
and that's on bonds. And look at
Okay.
the reason why I don't think it's over here, and the people saying, "Oh, bonds are going to be in a bull market again," and this and that. You're not going to end a 40-year bull market with just this. It's going to take a little time.
Yeah.
It's going to take a little time.
Yeah. In
Lastly,
fact, it
let's
could lead it to sovereign bond crisis everywhere. Okay.
correct.
All right. NVIDIA.
Let's look at NVIDIA. This is a
Our earnings
daily
today?
today, this afternoon. We did a video last
Oh
night
boy.
that we posted, so I wanted to share this. It's in the video. If you want to see a video, you can watch the whole analysis because it's great. It's really, really, really good analysis. But this is the highlight. If you take the April low and put a Gann square of 72 on here, we are 144 in price by 144 in time. That's a square.
Wow. Yeah.
Which means if we don't get above 148 and a quarter, above 148 and a quarter, and we stay on top of this square, we're going to 166. If we get stuck
Okay.
under, we're going to 130. So your key
I think
price
that,
is 148 and a quarter.
all right. So earnings. The bearish tell for me would be, of course, a miss is going to be a bearish tell. But
Mm-hmm.
a more bearish tell that's not even a tell because, what are you going to do? Chase a
Right.
$30 aftermarket break.
Mm-hmm.
But if we get good news, the report's okay, guidance is okay, and NVIDIA can't rally to new highs, that's a tell to me. So look for
Or
a
what if
go ahead.
there's a
Go ahead.
third option? What if we rally to a new high and then fail and false
Well,
break it?
that's what I mean.
Yeah. Yep.
Yeah,
Yep.
that's what I'm saying. That
Watch for all
it's
kinds of games tonight after
it,
these earnings.
yeah, yeah. So anyway, that's the whole market.
Right now. Yep.
Yeah, for
And
what's going
so
to happen in
so there,
S&Ps
you
too,
got the key
probably.
price, right? 148 and a
Yeah,
quarter.
got it.
And that's your tell for tonight. And that's it.
Okay.
This is our little channel where we do weekly videos we do one on a weekend, one midweek. We just did the video on the video last night. So if you want to check that out, just go check it out. And then if you want to converse with me or talk with me or yell at me or tell me I'm stupid, there's my Twitter handle. I'm glad to interact. And I post all the stuff. I post the Rebel Yell cycle when the hits are coming up. And daily put charts and stuff there just to talk with people.
That I'm so glad our paths crossed and we've taken this journey together and brought some people along. So appreciate you and your work and always open my eyes to something every time we have a conversation.
No, I'm really glad, Dale, that we've gotten to know each other and share information because you're like a good sounding board. I like throwing stuff off you and see what you think because of your experience and your knowledge is it's always good to get another set of eyes on your work.
Yeah, I don't like fading you, Ben. Okay. So anyway, thanks so much, bro, for being here. And we're entering what could be a challenging time,
Absolutely.
but you don't know if you have faith till you need it. So who's a warrior? We're going to trade through this and stay focused and be grateful every day that we still have peace in our land for as long as it lasts. And thank you, Ben, my brother, and we'll talk. God, it could be a completely different world by the time you and I talk again
I
next year.
100% agree, Dale. Listen,
Uh,
have a great Thanksgiving, you and your
you
family
too,
and
buddy.
everybody there with the Forex Analytics team and
Yeah.
everybody listening. Enjoy your Thanksgiving.
All right. My trading warrior brother, Ben Maldonado. Follow him on X at his name. Check out his videos or any other ideas or projects he has going on. He's a very good, not only analyst, but tactician. And he shows that with his swing stuff. And that's a wrap. And everyone have a great day. I know we ran a little bit over, but it was very worthwhile. And we'll see everyone tomorrow. Good hunting. Uh, Tomorrow's Thursday. Okay, I thought today was Thursday already. Anyway, don't just count your pips, count your blessings, and we'll see you tomorrow. Thanks again, Ben.
All right, Dale. Thanks so much. Take
All
care.
right, keep in touch, bro.
You got it. Bye-bye.
All right.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.